morning, good afternoon, or good evening. I have no idea what time you're watching this, and gonna try and navigate you through this as quickly as possible because it is an absolute clusterfuck, and it's got a lot of nothing good about it. Start here with the SPX, 6 gap ups in a row. Nothing unusual, happened many times before. 5 green closes in a row, all happening Monday through Friday. 2 years ago, 2021, first week in November, last time this happened prior to that, whatever, April 2021. It's just a rare occurrence is all that it is. It's very, very rare. A lot of you might remember back in June when we had the OPEX week, we were green Monday, Tuesday, Wednesday, Thursday, and then Friday was the big red day because you don't go green the entire week. We went green very much so with a very small range, smallest range that we have had in well over a month. It's back on October 11th when we were only at 33 points. 39.39 points on the SPX after a 16-point gap up, 30-point gap up the day before, November 2nd. I'll get to that in a minute. But yeah, we are up 13% year to date, 17% year over year. We are up 3.74% on the month, with the month of November being 175 points. We have bounced 269 points, 270 points, virtually 20 points shy of our October highs is where we came to. And I want to go over how Thursday we mentioned, right? Thursday, you had the Treasury report that was coming out. Wednesday, everybody knows, was FOMC day. Was what it was. Let's start here. Started off the week Monday after having that warning shot given on Friday. Get back into the calls this week if it was prudent. We started out on Monday, re-entering November 17th, December 1 calls can begin. FOMC will confirm it. QQQ. Re-entering November 17th, December 1 calls can begin. FOMC confirming. November 17th, 353 calls. December 1, 355 calls are my preferred. Spelling, misspelling, I have no fucking clue and I don't care. The 355 calls for November 17th, $5, $17. Now, I want you to take that into context. The QQQ ran 20 points this week, 19.88 points. 347.83 we started, 369 we made it up to. 26-point bounce from the lows going back a little more than a week ago. 19.88 point week on the week. Plus 1%, plus 1%. We had 2 red weeks in a row. We knew we were getting a green week. There was absolutely no question about getting a green week. What we did after the FOMC meeting became euphoric. And sticking back here with just spreadsheets before we go into the charts. Thursday was our big gap up, 30-point gap up. And then we ran all through having gapped up above that gap into our resistance areas as we went up to 43.1972, wound up closing near the highs. 80 points above the previous day. And this came because the Treasury report prior to the open came out and said that they were going to issue fractionally less bills for sale in the beginning of 2024 as compared to what they just got done issuing over the previous 3 months. That was our main reason why we were dropping during the last 3 months, other than the charts telling you that you were getting a drop. And that was because all of the liquidity, and you just saw it here with the Berkshire Hathaway shareholder meeting over the weekend, Warren Buffett has never owned as many treasury bills as he does now. Warren Buffett has never had as much cash as he has now. He almost has identical, if not more, equal to the cash balance that Apple has. Apple having reported their fourth quarterly decline in sales. Yet, here we are with their gap from earnings almost filled at 176.66. So I bring you on here to our master of wonders, financialjuice.com. When the payroll report came out on Friday, okay, it was horrible. Absolutely fucking horrible. Not only did it beat their expectations as far as not producing the number of jobs that were expected, but after the revisions of reducing jobs that were reported in both September and August, it wound up being 45,000 jobs total. That's a fucking red flag if there ever was one. The labor force participation was fractionally less, 62.7%. The average work week is less, meaning common sense, there are more people working two jobs. Unemployment rose to 3.9%. But this is where it gets interesting, okay? On Thursday, when they announced the Treasury was going to issue fractionally less bonds, we had the enormous move to the upside in the markets. On Friday, after the jobs report, immediately after the jobs report, U.S. short-term interest rate futures rise after jobs data, and traders, meaning those that are with the COTF, see less chance of further Fed hikes. What was snuck out in between there was how Maersk, the number one shipper in the world, just cut 10,000 jobs. So as we produced in here and started getting a couple of minutes later, the Fed swaps priced in a rate cut by the Fed June, July. Actually, they moved it to June rather than it being in July. While you have heard every Fed out there that is not a wimpy ass piece of shit talking about, no way, we are not cutting rates. We're not even thinking about cutting rates. And you hear Powell talking about higher for longer, higher for longer, higher for longer. So then you come in later in the morning, okay? Here we are coming in a little bit later. Got to scroll up. And it comes out here. Fed swaps show more than a 100 basis point of easing priced in during 2024, meaning they will be cutting rates by a whole percentage point during 2024. That's what your commitment of traders swaps, Fed swaps, the 7, 8 different people that sit there and manipulate the market when they make these statements right here. And we went up. And we went up to a significant point. Now I'm going to increase the font here for you because I don't feel like doing copy and paste on all of this shit. Already put it in there into your alert room as we went into the end of the week. When Monday, November 6th, we have nothing. We'll get to Monday in a minute. November 7th, from 2:45 in the morning until 2:30 in the afternoon, you have some Fed speakers. In between there, you have the U.S. trade balance coming out Tuesday morning. When we go into Wednesday, from 3:30 in the morning until 9:15 in the morning, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, with 11 having double counted BOG's government Bailey. And 9:15 in the morning prior to the opening bell on Wednesday is Jerome Powell.
Better than others. Look at the power. Look at the wind up. Look at the shot. Stumbled in, couple of steps back.
That first one rocked him. You're up.
Just a couple.
You still have more Fed speakers happening later in the day on Wednesday. On Thursday, more Fed speakers again with, once again, 2 o'clock, Jerome Powell on Thursday. So there is a lot to be considered compared to where we have come from and where we're expecting to go. So QQQ, knew we were going to get a green week. We went to where I expected us to try to go to the week of November 17th. We did it by November 3. So let's go over to our gaps. We'll start there. First of all, full moon. If you doubted the full moon, or you've never looked up in the sky once a month when there is this big white glowing ball that's up in the sky at night, that's what's called the full moon. It's not a special code for any kind of different trading strategy. It's a object in the sky that you notice that is a big glowing white ball. That's your full moon. Happens every month. Here plotted on the SPX chart are your full moons. And as we had, I'm just going to zoom in here, as we had our full moon take place on my birthday, September 29th, we placed our low right there on October 3. We ran up to that 43.85, 43.73 area, and we had problems. Then we sold off. We've come down here to another full moon. So full moons do not mean you are going to absolutely rally. What they are pivot points. As you can see here in December of 2022, we had a full moon after we sold off from the beginning of the month. We rallied up into the FOMC meeting, once again touching 4,100, and we proceeded to sell off into Christmas. It's a full moon, is all that it is. What's more important with your full moons are your charts. And when you talk about charts, you talk about what are you looking at with charts? Well, this specifically for me is where I look. And it's where my wider time frames get extremely overbought. That's exactly what we got up into on Wednesday and Thursday, and even more so on Friday. Come over here, and this happens to be on July 18th. We topped out about a week later. This right here comes out to be on June 13th. As you can see, when you zoom down onto June 13th, right up there, right around where this top was placed. Right over here, July 18th, where that top was placed. Then you had your dip, your higher high, you have your sell divergence, and your major move to the downside. All that we are is overbought. As I said when we were going into this full moon, into this week, we're not only oversold, but we have a buy divergence. What we have right now is nothing but overbought. We do not have a sell divergence, just as we had here in June. Over here, again, going into March, as we topped, overbought. As we went into that top there on March, overbought, all that we got was a little tiny dip. So where we're at right now is very pivotal. Remove these studies and bring you on into what we're working with here. Bring you into a 30-day. 4% move off of the full moon. 6.6% drop into the bottom. 6.58% rally over the course of 5 days. So I want you to really, because very few of you have participated in these before. Just as we had back here in August, where we had that huge move off of the lows up into September 1st. Bear market rallies are a lot stronger than bull market rallies are. And that's exactly what you just experienced, whether you like it or you don't like it. You will find out in the course of a month, in the course of 3 months, in the course of 6 months, whether or not this was a bear market rally. What I can tell you for right now is we are extremely overbought, and having made this move to the upside with gap, we are undoubtedly expecting during the course of this week, ending November the 10th, that we will be filling one, if not two, of these gaps. And I can tell you, if we fill two of these gaps and start trending down into the lower 4200s, momentum is then going to again shift. You look here at SPY, your October highs. Here we are. Where did we come down to at the end of the day? Right to the 50 retracement of the entire drop from the July highs. Same thing on SPX. Where did we come down to? Right to the 50 retracement from the July highs. 50 retracement, we gapped over that, along with that gap that was sitting there, that tiny little gap over here from way back a week ago. We gapped over it, so we created a gap with a gap. 50 retracement, 42, 48, 67 from that October high. Why draw a new line when it's only going to be fractionally lower to fill this gap right here? So essentially, we're looking at that 42, 48, 42, 40 area during the course of this week. We break below that 42.50, 42.40 area, something more significant, very much like December of 2022, very much like August into the beginning of September of this recent year, a couple of months ago, weeks ago. Bear, 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 bounce. Back over here on the SPY. Again, gap, and again, fake print. You don't need to believe it. You won't believe it until it actually shows, and it doesn't need to show. It's something paying attention to. QQQ. October highs, 8.5% drop. Boom, boom, boom. Doing okay, doing fine as we went into Wednesday, as we had our FOMC meeting. Doing fine, doing okay. And then go fuck yourself. Gap up, bluster move to the upside. Bam. Right to our old 367.84, 369, 365, 363. The places that I used to go back and table pound for weeks and weeks and weeks, going back to September. Why not look at the 360 calls? Well, we made it up here quicker than you would expect it to be. IWM is the last one I'll leave you with here. The weakest of weak weeks. I mean, the weakest. 8.65% over the course of the week. The beginning of the week, Monday, Tuesday, Wednesday, it's being real. Very, very real. And then you get this gap up here on Thursday from that report that they would be issuing less bonds for sale coming up here during these 3 months, but they're going to increase it again after that. And then your big gap up here on the jobs report, almost taking you back again to your highs over here in October. And pay attention or don't pay attention to all the lines that are drawn here. They're not really that significant to you because you're not trading this. Again, 1, 2, 3, 4, 5, we were looking at for the downside and got a big major move here to the bounce. Clean, I don't know which one's going to, no, I'll leave you here at this default. You know where you're at. You are on 3-year lows as we had this bounce into this week on the IWM. You are on very, very close to having broken down below that bounce top over here in August of 2020. You're already below the pre-COVID lows as we came down there over here in June, as we came over here in October of last year, and we took out last year's lows. This is the weakest of weak links, and what you had this week was, as you see, an 8.65% rally in the due to become renamed from the Russell 2000 to the bankruptcy 2000. Shared a report over there in the alert room for everybody to look at of one of the greatest due diligence guys that I've ever found. I used to be, years and years ago before I started this type of due diligence. And on Friday, what you had was you had another bank go down. Everybody was thinking about that Bank of America because Bank of America reported that there is a glitch and your deposits, they're going to be late. There's a bank that went down, and it's good to watch this. It's good to go through the whole thing. The reason the bank went down was because of a massive exposure into truck loans, those big semi trucks. And again, brings you back to what we were talking about here, where, yeah, you had the jobs report. Yeah, you're talking about the Fed swaps are showing more than a 1%, 100 basis points easing during 2024. And right after you had the jobs report, they snuck it in there where Maersk, come on down, Maersk, whatever. Maersk, the biggest shipper in the world, is cutting 10,000 jobs. So there's a lot of A doesn't equal B, and C is completely fucked up. So we made it back to where we should go in the middle of November, and we're already here. Earnings are completely finished. They're gone. They're done. NVIDIA has to report. That's the week of Thanksgiving. Who gives a shit? It's a Ponzi scheme. It's ridiculously back to overbought. Anybody buying NVIDIA after it's just had a surge from 392 up to 450 is an absolute fucking moron. You do have this gap to be filled here, but you don't buy stocks when they're up 20, 30% in 5 days. It's not the way the game works. So you come back over here onto the VIX. And the VIX, obviously, the ABC, that's what you can call it, didn't make it to 2364, made it to 2308. So we're going to remove that. But before we remove it, here is this 1544, which was the lows going back here in the middle of October before we started to have that sell-off. We broke that. We broke that, having broken down below 1622, having been bullish going into this week and expecting to get a drop down. What we've gotten now is a little bit too much, a little bit too fast, and we need to get a little bit of a put on the brakes. Let's get this thing sorted out, see what's really real, what's really not. Because at the end of the day, the dollar had been ping-ponging all month, all through October. This is what we are all of us can agree is the top, that 107,350. Ping pong, ping pong, ping pong. And then this week they broke that support level, that 105.60. We are pushing down onto this 104.636. We're extremely oversold. And you've got the same thing over there with your 10-year, same thing over here with the Nikkei, same thing over here with the Dow Jones, sell divergence over on the Dow Transports. Gold has made zero moves, zero. And then you come over here on the TLT. Come on, baby. And your TLT has made it right back to that big line, that 88.78. So this week, I am looking for a dip. What kind of dip? We will find out when we see what holds and what doesn't hold. Dow Jones, overbought. This is a daily we're looking at, overbought. The 50 and the 200 could be on the verge of your, oh shit, we're going to hell crossover. On your SPX, very far from that. I didn't see or project that we would be getting a death cross on the SPX until at least into December, because you've just got too much length on the 50 and too much time on the 200. But you will be converging in that 4,300 area relatively soon. Give it another couple of weeks, maybe in the beginning of December. Again, same thing, up into overbought. As you can see, the overbought here, and then the sell divergence as we put in the high. Same thing as we got overbought here, off of the full moon low at 43.35. We got overbought into that September top and ate shit. All these other overboughts, algorithm is completely different from here prior to June, July highs, than it is right now. You can see we are bouncing in all the ways from very oversold to fractionally overbought. Very oversold, fractionally overbought. Welcome to the bear market. Same thing here on the NDX. Fractionally overbought, where we are, oversold extremely. Here you had your buy divergence. Again, one of the reasons why we were long going into this week. Come on to your IWM. Again, overbought. Thing has been a complete piece of shit since July. Absolutely garbage. And now we've had this euphoric bounce, which magically touches the 50-day moving average, having already had the death cross in the middle of October. And it leaves you here with the VIX. And the VIX is something that you need to judge artistically if you are a true follower of the VIX every single day, watching it constantly. As of right now, we are oversold, as you can see over here in September, where we put in that high of the month in September, as we were over here in the middle of June, which we did not put in the high of the month there because we put in the highs back in July over on the SPX. We are oversold. We are very oversold over here on the VIX, and a turnaround, getting a bounce, seeing where we bounce will be very significant, because what concerned me on the VIX was that we only went down to 1542. Took till the end of the day there, right around 2 o'clock, where they started to sell it off. But we only made it down here. Should have been a lot lower, a lot faster. But all during Thursday, it just kind of faded. Just faded itself down. So again, below the 100, the 50, the 200, the 20, the 10, and the 5-day moving average. I'm expecting a bounce on the VIX early in the week because, again, as we come back there to the reality, and that is on Tuesday, you have a plethora of speakers. On Wednesday, you have a machine gun of speakers, and Fed's Powell at 9:15 in the morning. Then you have Fed's Powell again on Thursday afternoon at 2 o'clock. Earnings are finished. There are no major economic reports due out next week. Have an amazing extra hour that you guys get. I don't get it. So the market will be opening at 10:30 p.m. my time and closing at 5 a.m. my time. So give me a little bit of a break about these zero DTEs. You guys want to jump into at 3 o'clock in the afternoon, your time. There's a lot of money out there to be made. And by that, I will close off with an apology. And that apology is the calls got out of early. Again, Wednesday, I was happy, sufficient. We're up 50%, 60%, 70%, almost 100%. Thursday and Friday, they pretty much blew the fucking doors off of that one. The other apology I will make to everybody is how we stayed with the safe edges. I avoided at all cost trying to get everyone off of the risk plays. And Monday only paid 25%. Tuesday only paid 15%. Wednesday only paid 25%. 25% is $1 on a 5-point spread. You're getting $1 credit, you have $4 at risk. That's the way the numbers work out. On Thursday, even more, because we came up to and touched and broke the safe edge, but because it was the 43.25, 43.20s, 13%. And then there on Friday, 85 cents is what you got. Wound up closing there, even though you have 3 consecutive 1% days. I'll go with that there. I'll leave you here with that. 3 1% days in a row. I have gone back and looked at this, because you got to remember, you're playing a video game. You got to try and catch things, as best you can. February, end of January, the beginning of this year, boom, 1%, boom, 1%, boom, 1%, 3 in a row. And that was as we had the FOMC meeting on February 1st, 41.55. Next day, gapped above that 41.55, which you guys learned about when we dipped here recently, went to that 41.95 the very next day, and boom, that was your full moon, 3 consecutive 1% days in a row. Jobs report came out the very next day. Full moon was on the weekend. Jerome Powell spoke on the 7th, And within a month, when we had the full moon coming up next, we had already bottomed out right there at 38.08, a minus nearly 10% move during that month. Prior to that, I was looking back prior to that. Here it is. 3 consecutive 1% days in a row. November 4, November 7, November 8, 2022. Very next day, FTX crashed. So take it with a grain of salt if you want to consider this being a gift to go buy time. November 17th, December 1 puts, QQQ, SPY, whichever it may be. Having entered a little bit early on the November 10th puts, expecting that we were not going to get the move that we got on Friday because you don't get 5 green days in a row. We'll have to manage those as the week goes on, and we don't have Jerome Powell until prior to the open on Wednesday. Wednesday morning will be cut it or ride it. Have a good weekend.